Every now and then it makes sense to take a step back to look at on-chain data in Bitcoin and see how did this develop actually over the cycles. How did activity develop? How did transaction values develop? And how does this map to the prices? Because only when we look behind the shallow surface, we can see the structure of the real activity. We can see what's driving everything. And so let's start off with a 7-day moving average of Bitcoin's daily transactions. The number of transactions every day, a moving average thereof. This chart starts in 2010 when Bitcoin was created and goes all the way to today. Now, isn't that interesting? The number of transactions actually didn't grow that much since 2018. 2018 was over here, right? The end of 2017, beginning of 2018. This was after a massive bull run. So the price went up by 9,000%. But from that peak, the price still went up by 160, 170%. The usage did not go up by 170%. What used to be a high in number of transactions now is now an average day, but still we are at a peak, maybe 50% higher than at the end of 2017. Prices grew much faster though than the number of transactions. Why is that? I think it has a lot to do with Bitcoin not being used for speculation anymore. It's not being used as a payment vehicle. It's not being used to speculate so much on the ups and downs anymore. It's used as a store of value. More and more people simply buy Bitcoin and forget about it. They simply just store their wealth in it, potentially diversifying a stock portfolio or portfolio even of property. Very few people get in and out of Bitcoin several times a week. So one might argue that not seeing the number of transactions increase is actually a sign of the market maturing. It's less and less speculation and it's more and more investing. And the exact same thing can be seen for the number of active addresses. People aren't that active in Bitcoin anymore. At least relatively speaking, it's not growing. We are even at a lower value compared to the end of 2017. We've got roughly 90 or 80,000 active addresses right now. This is not growing. So it's not activity that's driving the price. The utility of the Bitcoin network is not just in its transfer function. It's mainly in its tokenomics, that there's not more than 21 million ever being created for Bitcoin. Here's the problem with crypto YouTube. People promoting becoming degen or buying 100x coins. That's what gives clicks, but that's not what's going to bring you forward. I refuse to take money from centralized exchanges. I refuse to take money from crypto projects. I refuse to pump and dump a coin and filling up my pockets in the background. I don't do any of this. Instead, I share my knowledge in the form of tutorials in the premium membership. So that's content that won't do well on YouTube, but that builds up skill over time. You can also directly contact me over there. You can directly pick my brain. Feel free to check it out. TheBitcoinStrategy.com is the link. It's quite interesting actually, right? Because Bitcoin was created as the peer-to-peer cash. The idea was to simply have decentralized money that can't be censored. It's still decentralized, it still cannot be censored, but it's not used as a trading vehicle, it's used for storing value. When comparing those two charts, the number of transactions and the number of active addresses, what we can also see is that when comparing those two charts, right, the number of transactions and the number of active addresses, what we can also see is that the activity per active address might be going up a little bit. So the number of active addresses is completely flat. The number of transactions per day is slightly rising. And I think this might be related to Bitcoin DeFi, to inscriptions, to new use cases of the blockchain. I'm not really sure though how long-lived that will be. Bitcoin, in my opinion, isn't the best vehicle to make those DeFi transactions. Bitcoin should stay as simple as possible, so we also don't get a clogged network. We're actually going to look at this further out in this video. We're going to look at the Lightning Network, how well that scales. The Lightning Network being the official scaling solution to make peer-to-peer transfers still happen despite the gas cost. Bitcoin needs adoption to further grow, so let's not just look at the number of active addresses, but at the number of new addresses. It's interestingly enough not that different. So it's pretty much only the new addresses that are active. The relationship here is 1 to 2 roughly. So once you became active, once you started dollar cost averaging, once you got your Bitcoin, you simply just leave it there. You don't do anything else with it. Now here's the first chart that might give us a hint of how to potentially time market tops. Because this is now multiplying the number of transactions with the Bitcoin price. So we look at Bitcoin's on-chain volume. And we saw a quite nice spike in 2018, right? Again, this is when the price peaked and went down by more than 80%. We see another data blip here in 2019, and then the massive run up that brought us all the way to 68, 69K. Then our subsequent crash. But look at this. The price of Bitcoin is very close to all-time highs. The on-chain volume is not. So people aren't really taking profit here. People aren't selling. People aren't transacting. This is obviously a good thing if you're holding Bitcoin, because that means that the price rally is likely going to continue to last, right? If the long-term holders aren't selling and new people enter the space, price goes up. Here's another way to time potential tops. This is the average transaction fee on Bitcoin. Unfortunately, this metric does get distorted now with ordinals. Before, we simply just had a lot of Bitcoin transactions, and whenever this was high, you wanted to get out. You wanted to buy when transaction fees are low, and you wanted to sell for very high transaction fees because then the price was high, right? This is the end of the first quarter of 2021. That's over here when the price peaked. We got another 2 peaks, but again, this was not price related. This was ordinals related. And I hope that ordinals won't catch on, because if we get permanent transaction costs of $40 or $50 forever, then I'm not sure how many people will still be excited about self-custody of their funds. Then maybe ownership becomes more and more centralized and people rather buy the ETF or buy the Bitcoin for no transaction fees on the centralized exchanges. This is not healthy. There needs to be a solution. Either ordinals have to die or the developers have to do some kind of adjustment. Right now, it's still acceptable, but let's see what happens once the bull run really heats up. One more chart. The Bitcoin supply that's currently in profit as a fraction of all of supply. When we are close to an all-time high, of course, this value is close to 100. When we are in a bear market, this is rather close to 50%. So very rarely do we actually see the majority of Bitcoin holders in losses. Most of the time, the majority is in profit. The same is true right now. I'm not sure if this is the best metric to time tops, because sometimes we can be at this 100% level for quite a while and Bitcoin can continue to rise for a while. But it is somewhat useful to time potential bottoms, right? When most people are in losses, that's when you want to buy. That's when the selling pressure tends to go down, right? Because people can simply just wait out the bear market and wait for higher prices to come. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. There's also a free Telegram. A link is down below.